Hello everyone and welcome to the outlook for Bank Nifty and Nifty for tomorrow. So in this video, I'm going to talk about why I think there is a small reversal coming up in Bank Nifty and Nifty both. And we're also going to look at the option chain and see if we get any kind of hints or clues from there. So stay tuned. All right, so let's first talk about Bank Nifty. So with Bank Nifty, as we discussed in yesterday's video, we saw sort of a sell-off late on Friday, and we saw it sort of continue today, but it just could not materialize. It could not give any sort of continuation today. So what do we see today is we see a hammer doji being put in. This is the hammer doji. I'll just draw it for you guys. So this is a hammer doji. What is a hammer doji? A hammer doji is a sign of a bullish reversal. So it's a good sign. If you want to see in a long-term perspective, this could probably be some sort of base for now. But obviously, we'll have to see what happens tomorrow and what happens throughout the rest of this week before we take any call on it. Also, it is important for Nifty to sort of move higher after this hammer doji is put in. If it only consolidates, if it only moves in a straight line with some choppy action, this hammer doji is regarded as useless. So why I feel that we have some sort of a reversal coming in. Let me switch to a lower time frame. Let me switch to the 15-minute chart. This will give us better hints. So this is the 15-minute chart. So I want to highlight one important thing for you. So today we gapped down. So we had this gap down. We had a sort of a gap fill today. And again, we had a sell-off. So at this point, once we see a sell-off, we need to expect some sort of a continuation lower. We need to continue lower. But that did not happen. We did not see any sort of a continuation. Instead, what we saw just the low breaching by a few points. We saw the low breach by a few points every single time. It happened for a total of 4 times. So we saw a low being put in the morning, then sort of the low being broken by a very small amount. Then again, we saw a new low being put in, and we saw the same thing late in the evening or towards the afternoon. So every time a new low is put in and we do not see any sort of a continuation, that is a bad sign. That is a sign of a potential reversal. So my idea for tomorrow, my idea would be to go long the Bank Nifty once it breaks this entire sort of resistance. We are seeing 23,100, 23,150 act as a mini resistance. We're seeing that Bank Nifty is having some sort of a trouble going higher. We can clearly see how many times it's tested this region. So as soon as Bank Nifty goes above 22,150, I'm sorry, 23,150, I would like to go long. So that is my simple idea for Bank Nifty tomorrow. Let's now look at the option chain and see what kind of hints we're getting. So I'll quickly switch to Bank Nifty. Firstly, let's talk about the total OI. So we see that calls still have a much larger open interest as compared to puts. This means that the call writers are ready to take a much larger risk compared to the put writers. This means the market as a whole is still very bearish. So the OI data is not giving us confidence in going long. But remember, the OI data is always a lagging indicator. The OI data will always tell you, what has already happened, and it sort of offers a small hint on what could happen. We cannot take the OI data as the holy grail. We cannot take that data as in its form. We need to sit and understand what exactly the data says. Let's switch our view to now the at the money calls and the at the money puts, and slightly away from the money strike prices. So again, we see a large build-up. We see a large build-up in the at the money calls and slightly away from the money calls. This is again a great sign for bears. This means the call writers are confident that 23,000, 1,000 will not be taken out. Whereas we see the put writers not exhibiting the same sort of confidence. We see so much of position unwinding with the put writers. The put writers do not have enough confidence that this market will move higher. So understand this, that as soon as we see any sort of a move higher, if we do not see these call writers getting out of their positions, it means there is something wrong. So we need to analyze the open interest data, the option chain very closely tomorrow once we see Bank Nifty break this level I spoke about, 23,120, 23,150. So whenever we see Bank Nifty break that level and we do not see any sort of a significant change in the open interest data, be cautious. If we see any sort of call writing unwinding, that is call writers exiting their positions, then that's a great sign. That's a great sign. Okay. Now let's talk about what happened with Nifty. So Nifty again, it didn't trade too well today. It was extremely choppy. Again, just like Bank Nifty, we see Nifty put in a hammer doji. We see it put in this kind of a doji. So this is again a good sign of a reversal. So we might see a temporary bottom here. But again, a temporary bottom only and only if we find any sort of a continuation higher. We need Nifty to break today's highs with confidence. We need it to break the high and stay there. If it doesn't stay there, then that means there is no confidence in that breakout. Okay, so let's switch to the lower time frame now. So quick switch to the 15-minute chart again suggests that more or less we had very choppy price action. Very choppy price action. So we saw Nifty sort of open flat, or with a very small gap up of about 20 points. We saw it sell off in the first 15 minutes, and that pretty much the first 30-35 minutes was the bottom for the day. Then we saw it just trade flat throughout the day, and surprise, there was a late rally post 3 p.m. There was a late rally in Nifty. If you compare the charts of Reliance and you compare the charts of Nifty, you will see the exact same chart. So if I open the chart of Reliance here, so you can see that this entire move was due to Reliance. This index was managed, this move was managed, which is why I'm slightly skeptical when I say that we could be making a temporary base, and we need to see some sort of a momentum. Such moves are usually to push out. These are to push out all the weak hands, all the retail money. There is so much talk about weakness in the market. What does this do? This brings in all the retail money to go short. So such move, it pushes out the retail. It pushes out retail. Retail gets scared. People who have smaller positions, people who are not pro traders, they get scared with such a move and they start exiting their positions. So what I would suggest to anyone listening is stay cautious for now. Do not take aggressive positions in either direction. Be careful. Once we see any sort of a continuation, either lower or higher. So once we see Nifty move above 11,400 and we see Bank Nifty move above 23,150 is when we want to take our longs. Before that, just stay out, stay out of the market and just observe. In case you want to do some option writing, you can select far out of the money options, so your risk is limited. Now let's talk about the option chain. So I'm going to quickly switch back to the Nifty. Again, we're seeing a larger open interest for calls compared to puts. This means again, the call writers are ready to take a larger risk compared to the put writers, which means the market as a whole is confident that the market will move down. Now let's look at the closer to the money. The closer to the money options. What are they doing? When we look at this data, it clearly suggests that the market is bearish. Why? Look at this open interest build up in calls. Look at this open interest build up. Look how many people are piling on, writing calls, which means people are going short calls. That means people as a whole are expecting the market to dip significantly. Look at the puts. We're seeing people exiting their positions. People have gotten out today despite the market closing green. Put writers have gotten out of their positions. Why? Is there some sort of a index management here? This is just data is very contradicting. When we look at the charts, we see that there could be a bullish move. When we look at the AI data, it is suggesting a bearish move. So such confusion, you should just simply avoid trading. Personally, I have taken a little far away from the money options, as obviously I've written these options, and I'm going to be very, very cautious as long as Nifty trades between 11,300 and 11,400, 450. If it is not breaking this range, I will simply stay out and I will just simply write far out of the money options. I really like writing at the money and one leg away from the money options because that gives a fantastic reward. So for now, I'm going to remain very cautious. So just remember these levels again, 11,300 and 11,450. As long as Nifty is between that, be very, very cautious and make sure that your risk management is tight. A choppy market means a lot of stop losses getting triggered. You do not want that. You would rather want a little easier money, and that easier money could come with writing slightly away from the money options. Okay guys, so that was it. Thank you so much for listening. Please comment down below on what kind of content you would want me to share. I am planning to add a lot more content in terms of commodities, and because that is something I see not a lot of people are sharing right now. So I am going to slowly start sharing information on commodities, especially on the commodities market in India. All right, so thank you so much guys. Thank you guys for tuning in, and see you guys in the next video. Thank you.